As President Donald Trump initiates, then pauses, then initiates tariffs on countries that are trading with the United States, one thing is becoming clear to me that this administration is not going to be kind to businesses that have manufacturing outside of the United States. So I've been searching for businesses that could benefit from that difficulty that others will have. And I found an interesting one in my coverage in Keurig Dr. Pepper. This company has manufacturing facilities in Pennsylvania, South Carolina, Arizona, and Vermont. And so it could stand these tariffs and come out on the other side relatively unscathed. Furthermore, the types of products that it sells, beverages for consumption at home, insulates it from extreme circumstances if the United States economy does go into recession, which the odds are increasing as these disruptions are increasing. So I'm going to go through some of the details that makes Keurig Dr. Pepper an interesting stock for investors to consider during this stock market chaos. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Keurig Dr. Pepper includes of course, Keurig machine and the K-cups that go into them. And then on the other side of the business, it has brands like Dr. Pepper and Snapple, and it just bought an energy drink company. So it has a wide presence in the beverage market. At $15 billion in trailing 12-month revenue, that's up significantly from around $6 billion in 2015. Furthermore, the company generates strong cash flow from operations to sales, even though these figures have been volatile over the previous decade at 14.5% and rising. The company's cost of goods sold is not likely to become severely impacted as a result of tariffs. What's more, if its competitors are impacted from tariffs, or if consumers tighten their budgets and have less discretionary spending, they're going to hunker down at home and consume more of the beverages at home, which are lower cost of consumption. Instead of going out to Starbucks for a cup of coffee, people are more likely to stay home and have a cup of coffee instead. And that could be good news for a company like Keurig Dr. Pepper. What insulates the company is the fact that it's a consumer staple when it sells into consumer budgets. People, if their income increases, they're not going to increase how much they spend on Keurig Dr. Pepper. When their income decreases, they're probably not going to decrease the amount of money they're spending with Keurig Dr. Pepper. And that lack of volatility or that lack of correlation between the ups and downs of the economy makes it an attractive investment during the current economic turmoil. These tariffs are causing a lot of disruption, and I wouldn't be surprised if the US economy slows down considerably as a result. There's going to be many people that lose their jobs as businesses close down, because if you're importing products from China and China has a tariff now at over 120%, that business may no longer be viable. And so I wouldn't be surprised if those businesses that are strongly dependent on importing goods from China as their only source of competitive advantage, they might have to close down. And those operations and those job losses could reverberate throughout the economy. Now, one thing that's unattractive about Keurig Dr. Pepper's business is the very slow and small return on investor capital at just 3.65%. And it's been this way since 2019, since all of the acquisitions came into place. The business hasn't found a good way to generate stronger returns on investor capital. But as I'm going to share with you a little bit later, this is also reflected in the valuation. Keurig Dr. Pepper stock is not trading at an expensive valuation, and it exemplifies why it's not trading at an expensive valuation. This is one of the reasons why. So when I calculated my discounted cash flow valuation for Keurig Dr. Pepper stock, I found the intrinsic value per share to be $44. The current market price is just $35. The weighted average cost of capital for this company is just 7.5%. So while the return on invested capital might be very low, the weighted average cost of capital is also very low, giving the company an opportunity with just a small improvement in the ROIC to generate good shareholder returns. I like to compare the ROIC to the WACC, and in this case, it's not very favorable because the ROIC is extremely low. But because the WACC is also low, and the company is entering into an economic environment which could favor its business, it has an opportunity to boost that ROIC considerably. The beta of this business is just 0.63, and the reason, remember, beta measures how strongly correlated a company's stock price is with the S&P 500 index, and the reason why it's not very correlated is what I explained earlier. People are not going to increase or decrease their spending with Keurig Dr. Pepper depending on their economic circumstances. If they get a promotion, they're not likely to increase or decrease, right? If Dr. Pepper is your favorite beverage, you're going to consume Dr. Pepper, right? Whether you get a promotion or not. And so that factor, that characteristic about the business makes it less risky during volatile economic times like we're about to enter. Furthermore, when I looked at the business on a forward price to earnings valuation, it was the cheapest out of the three big beverage companies here in the United States, or the big three soda companies, carbonated beverage companies in the United States. Keurig Dr. Pepper is trading at a forward PE of 15.98 or just under 16. PepsiCo is at 16.4 and Coca-Cola is at 22. Now, Coca-Cola and PepsiCo are better companies, I agree, but I'm just presenting them here just so you get a perspective of Keurig Dr. Pepper's valuation here at just 15.98 compared to the other two. So for all of those reasons I highlighted in the video, most notably the undervaluation in the discounted cash flow model, the relatively fair valuation in the forward price to earnings model, and the business's position with American manufacturing under an administration that's becoming hostile to companies that are outsourcing outside of the United States, and its position in not being correlated with economic growth or economic recessions makes Keurig Dr. Pepper an interesting stock to consider during these economic times. I have this stock rated as a buy. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.